Yo, Wincrease team, what's going on? Today is Saturday, September 25th, 2021, and the market is officially closed. Let's check out these charts and see if we can see anything for what could potentially happen next week. Alright, first and foremost, thank you. Always a big thank you for following me, for sharing, for anything. Merchandise is my fellas. My merchandise, everything. Just thank you. It's appreciated. Without you, I can't make it this far on this platform. So I appreciate you. All right, so let's go to these charts. First thing is the S&P. S&P closed at 44.55.48. Record high still remains the same, 45.45.85. Last week we talked about the trend. Trend obviously is still there, and we also talked about the continuation of the market moving lower, and it did do that this week. And we said if it moved lower, likely it would get to the 20-day moving average and make its bounce, because in technical analysis we're looking for what happened in the past, and we noted a few instances where we had two red days would happen. This was the first instance. We had two red days, move lower, touched that 20-day moving average, came back higher. Another instance where we had two red days, move lower, touched that 20-day moving average, came back. You've got a similar instance now. 2 days, touched it, came back higher. Interesting enough, we also defended our 4,400 level. This was the level that we pointed out was going to be the level that I said the S&P would get to, and it defended it. So I'm looking forward to seeing that the market may continue to move higher and test out its highs that it made 3 weeks ago. We'll see what happens next week. That's the S&P. Let's check out the Russell, ticker IWM. IWM closed at 223.05. Record high remains the same, 234.53. Now, let's check it out. We still got our range going. Now, we've also looked into this last week that the 50-day moving average is starting to creep into this range. And typically what happens when you have a range-bound stock in a 50-day moving average or 200-day moving average comes into play and starts to get into that zone, get some action where it likely is going to make a dramatic move. And in this case, I think it will be higher. And my price target is still 250 for IWM. We're going to get out of this range at some point in time. I think it's coming sooner rather than later. That's IWM. Let's check out the Dow. For those of us on Thinkorswim, it is $ ticker DJI. The Dow closed at 34,798 on the dot. Record high 35,631.19 cents. Trend remains strong on this one. We have our 20-day moving average, which is starting the curve. And last week we noted again that if the market will move lower, that it would likely defend itself, and it did, and made a hammer candle. This one is under the 20-day moving average, and we got its 50-day moving higher as well. Now, I'm not concerned that this is a violation of any sort, because we're also still within range. So what we will do now is mark our level. Let's take a look at what that level is. Let's see where on this chart is the price bouncing, and I can spot it quickly. Let's see if you can spot it quickly. It's right here. And why is it here? I got one instance, two instance, 3, 4, 5, 6 candles right there that all touched near this level and moved higher. These obviously are outliers. And then we have again this one and our most recent candle, this one. So I have a lot of instances here where this level was defended, and this is we'll just roughly call it 33,800. It got near there and buyers came in and lifted the price. So we're going to leave that there and see if it continues to defend. That is the Dow, and last we are going to discuss the Nasdaq. Ticker NDX is what we will use for the Nasdaq. Nasdaq closed at 15,329.68 cents. Record high remains the same, 15,701.40 cents. And we're going to take a look at the trend here. The trend here obviously is still strong. We've got our 20-day moving average, and every time it's gotten close to it, it's lifted higher. And once again, it is getting close to it, and we have a good chance of continuation. Now, I pointed out last week on this one how we've had a bearish engulf, and I noted that the bearish engulf is often just a pause in the trend or a downtrend signal. We need confirmation for that. We did not get that confirmation. This is the level that it needed to break, and it did not break that level. It actually held up that level. Often, if that signal there does not give the pause sign or pause signal, then that is going to be a continuation signal. That's the tricky part about candles that people do not understand, is that if the signal does not give what it is intended to do, it's often a continuation signal. But again, we need confirmation, and that is going to be it for this week's analysis. Thank you again for checking out. I really do appreciate it. Also, make sure that you check out my boys, Marathon Money, every single week. They give you their input on the stock market as well as other topics. My episode of Stocks and Bars will be coming out next week. I will make sure I get that finalized, hopefully at the end of this recording. And as always, get out there, enjoy your life. Your time is important. If there's anything you take away from this, is your time is valuable. It is an asset that everybody is trying to acquire. Make sure you use it wisely. Get out today, do some exercise, take care of yourself, get some fresh air, spend some time with people, get some laughter. Laughter is the best medicine for pretty much anything. And that, we're going to sign off. Check you later, all right? Peace.